Few years back, someone has asked a question on Quora whether he could start with $100 and turn it into a six-figure amount. I answered that question, and that question got many likes until today. After every few days, I get notifications that somebody has upvoted my answer. In this video, I'm going to explain in detail how you can start the small amount like $100, $500, $1,000 and take it into a five-figure or six-figure amount. I made a presentation so that I can explain everything in detail and in more clarity. So let's start with the presentation. It's $1 million. I am calling it the $1 million trading challenge. How to grow a small account into five figures with low risk. Risk management is very important in trading. Many traders don't take risk management seriously, but experienced traders know that it is risk management that ultimately ensures your success, and it ensures that you don't suffer huge drawdowns. We can start with $100. We can also start with $200, $300, $400, $500, and even $1,000. But more than $1,000, I would not advise. If you cannot handle small amount like $100, $200, $300, $500, or $1,000, then you should forget about trading with $10,000 and $50,000. I get many emails. People say I started with $5,000 and now I'm down to $500. What should I do? I always advise that first learn how to trade with a small amount. And once you have mastered how to trade with a small amount, you can then start trading with a larger amount. Now, it's very important that you have a solid trading strategy. In every trade, reward over risk is very important. Reward is your profit and risk is your stop loss. Suppose you risk 20 pips and you make 20 pips. Your reward risk is 1:1. Many people have this strategy. They risk 20 pips and they make 20 pips, or there is 30 pips and they make 30 pips. So they are happy with 1:1 risk reward risk ratio. The problem with this 1:1 ratio is that if you lose one trade, so you just lose all your profit. What we should focus is on a trading strategy that has 4 times more reward, 5 times more reward than the risk. And there are strategies that can give you reward risk of 10:1, means you risk 10 pips and you make 100 pips. The advantage of this strategy is that even if you lose one trade, you don't lose much. You have to lose 10 trades in a row to wipe out the gain made by one winning trade. This is very important for you to understand. Once I started trading, I started with a 50 pip stop loss. I made few winning trades. Later on, I had a losing streak and I lost few trades. I saw that all my profit has vanished. It was very important for me to win all the trades with this big stop loss. So I started thinking, why shouldn't I reduce my stop loss? After a few weeks of research and looking at charts, I realized that I can have a stop loss of 20 pips, started trading with that. And I saw that if I win one trade and make 100 pips, then if I lose 5 trades in a row, I lose that 100 pips. That was better than having a 50 pips. So after a few years of experience now, I have reduced my stop loss to between 5 and 10 pips. And my take profit target is always 100 pips. The win rate of my strategy is 50%, which means on average in 10 trades, I win 5 trades, making 500 pips, and I lose 5 trades, losing 50 pips. So I make 450 pips on average on 10 trades. Now let's see how I can improve this strategy further. Once you have a strategy that you have measured statistically, how do you measure a trading strategy statistically? You measure it by making 30, 40 pips with that trading strategy. I would advise at least 50 pips, 50 trades. So once you have made 50 trades, you measure the win rate, you measure the average pips made on the winner, and you can easily measure the average stop loss for each trade. Since our stop loss is always 5 to 10 pips, we know that our losing trade will have 5 to 10 pips loss. And take profit, sometimes the market moves more than 100 pips, sometimes it moves 70 pips and reverses, sometimes it moves 80 pips and reverses. So what we need is how many times your take profit target has been hit. So once you calculate these ratios, you will be able to measure the win rate as well. In the end, I will also explain my trading strategy. So we have a trading strategy that makes 100 pips with 5 to 10 pips stop loss, and the win rate is 50%. I never use a stop loss bigger than 10 pips. Suppose we start with $1,000. In the beginning, I will never risk more than 1%. I rather prefer to not risk more than 0.5%. As I've said, I've developed a trading strategy that has a stop loss between 5 to 10 pips. I don't use market orders, I use limit orders. and limit orders help me execute the trades. Sometimes it happens that trade doesn't get executed because the price doesn't hit the entry price level. Doesn't matter. There is always a new opportunity every next day. Market orders result in poor execution of trades. Always you'll see that you'll have 4 or 5 pips slippage or in a fast moving market. Secondly, using market orders promote impulsive trading. We should avoid impulsive trading. Trading psychology is very important. It's very important that you learn how to cope with a losing trade. It happens that once you lose a trade, you immediately open a new trade, thinking that you are going to recover that loss, but you again lose that, and losing streak develops. This used to happen to me a lot. After winning a few trades, I would have a losing streak, and I would lose 7, 8 trades in a row. How to avoid that thing? That I will show you how we are going to avoid a losing streak. So we are going to keep the risk low, 0.5%. So if we start trading with $1,000 and 0.1 lot and the stop loss is 5 pips, so our risk is 0.5%. Suppose we only lose $5, and suppose we make 100 pips, and 100 pips with 0.1 lot means $100. So this is important. Once we win a trade, we can increase the risk level to 2% and open the next trade with 0.4 lots. Our stop loss is 5 pips. So we are risking $20. If we lose $20, we still have got $80 of profit. And in case if we lose this trade, we are going to again reduce the risk to 1%. And if we again lose it, then we again going to reduce the risk to 0.5%. This is how we are going to avoid losing streaks. If you lose, there is a high probability that you are going to lose next trade also. So you reduce the risk. And if you win, there's a high probability that you're going to win next trade also. So you increase the risk. So if we win that trade with 2% risk and make 100 pips, we make $400, and we have now got $1,500 in our account. If we win a 2% risk trade, we increase the risk to 3%, and now we open the trade for 0.6 lots. Stop loss is again 5 pips. So in case of loss, we lose $30. If we make 100 pips, we make $600, and we will have $2,500 in our account. If we lose 3% risk trade, we reduce the risk to 1%. And again, we reduce the risk to 0.5%. And if we win 3% risk trade, we increase the risk to 4%. But I never increase the risk more than 4%. I keep this process, I repeat this process again and again, again and again, again and again. It's very difficult. You'll have 4 or 5 trades, winning trades in a row. Most of the time it will be 2 trades in a row, 3 trades in a row, sometimes 4 trades in a row. So this is how it's going to be. You'll win 2, 3 trades, you lose 1, 2 trades, you win 2, 3 trades, you lose 1, 2 trades. This is all. my trading goes. But this is when you have tight risk management, you will see that you will reduce the impact of a losing trade on your trading account, and your drawdown will be small. And you will win big when you are on a winning streak. It's very important for you to understand that when you win, you should win big, and when you lose, you should lose small. This is the secret of success in trading. Now let's go to the MT5 charts, and let me explain to you my trading strategy. As I said, trading strategy alone is not sufficient. You need a good risk management system. We can also call it money management system. I have explained in the presentation in detail how you are going to improve the performance of your trading strategy with a good risk management system. As I had explained in that presentation, once you win a trade, you increase the risk, and once you lose a trade, you decrease the risk. But we never risk more than 4%. Now let's discuss the trading strategy in some detail. Now this is the trading strategy. This is a euro dollar 3-hour chart. I always trade on 12-hour chart, H12, 8-hour chart, H8, 6-hour chart, 4-hour chart, or 3-hour chart. And I avoid looking at lower time frame like M30, H1. There's too much noise. How I'm going to find a good trade? Let me show you a good trade. This is a good trade. It would have given you a very low risk 5 pip stop loss trade with 100 pips profit target that would have easily been hit. And this is another very good euro dollar trade with a stop loss 5 pips and take profit of 100 pips. Now it's pound dollar 4-hour chart. Here we have got a very good trade that would have given $5 pip trade and 150 pip take profit. As I said, I don't set more than 100 pips take profit, but let me clarify. There are some pairs like pound dollar, which is very volatile, and the probability of hitting 150 pip take profit is high, as compared to on a euro dollar where 100 pip movement is not that frequent. So on a pound dollar trade, I can have a higher take profit like 120, 30, 40, 50. It depends. What I do is I try to identify the support and resistance levels on H6, H8, H12, and from there and then I place a limit order. This is also a very good trade. It would have given you 150 pips easily. Our aim is to catch 100, 120, 130, 100 pip, 150 pip movement with a small stop loss. And our win rate should be something like 50%. It's very good. But even if we have 40% win rate, and if we lose 6 trades with a 5 pip stop loss, we lose only 30 pips. And if we make, let's say 120 profit on 4 trades, then we make 480 pips. Okay. Again, we have just see before 50 pips our net profit. So this is the advantage of having a trading strategy that has got an excellent reward to risk ratio. I have developed an indicator that I will explain in future videos. Now, how I look at these charts, because see, there are 28 currency pairs, and you have to look at least 10 charts. So in fact, you have to look at 280 charts, and it's not easy to look at 280 charts. So I have developed an indicator, and I will explain that in future videos. I hope you like my video.